Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the Fear and Greed Index. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. I'm sure many of you are aware of the Fear and Greed Index. We've covered it a few times on the channel before. You can find the Fear and Greed Index at this website. I'll link it in the description below. And it might come as no surprise that today we are looking at Extreme Fear 22. Yesterday was Extreme Fear. Last week was Extreme Fear. Last month was Extreme Fear. This scale goes from 0 to 100. And so if it's basically between 0 to 25, it's Extreme Fear. The next quartile up is fear. The one after that is greed, and the one beyond that is extreme greed. But unfortunately, in a bear market, it more or less just stays either fear or extreme fear for the entire time. Therefore, looking at the raw values of it isn't always that useful because the extreme fear we feel today, we would have felt that way in the summer as well. We would have felt that same way in January. The Fear and Greed Index was at 23 on January 26th, and today it's at 22. There's a huge difference in the price of Bitcoin between where it was in January of 2022 and October of 2022. So, as I've shown before, there are other ways we can look at this. Okay? We can apply a moving average to it, which I think is somewhat useful. For instance, if we were to look at, say, the 90-day EMA of the Fear and Greed Index, you can see that we peaked in early 2021, right? In February, which makes some sense. I mean, there's a lot of indicators that peaked back then in either January, February, March, or April. A lot of indicators showed, a lot of indicators back then were showing that we were, completely overbought in terms of the RSI. We were, uh, exuberant according to the risk metric, right? We were in the highest risk band. And according to even the extension from the 20-week SMA, we were sort of hitting the same downtrend line that we always hit. And I was actually quite bearish going into the summer of 2021. And I got bullish going into the end of the year, and I was hoping for us to continue the rally, but unfortunately we did not. And what's interesting is that we continue to show lower highs and ultimately lower lows. I mean, we had a high over here in early 2021. We put in a major lower high in at the end of 2021. And so far, we've been unwilling to really see any type of sustained break to the upside in terms of the 90-day EMA of the Fear and Greed Index. And it sort of hit this local top back in August, back at, the 25 to 26 level. And then since then, it's just been slowly going back down. The interesting thing to look at too is the 90-day EMA of the Fear and Greed went all the way below 17 back in the summer, below 17. The reason why that's interesting is because if you look at 2018, the lowest we ever went was on the 90-day EMA was at like 23 or so. So this bear market is certainly has certainly hit a bit harder in terms of the length of it. I mean, again, if you measure it from early 2021, it's been going on for quite some time. Of course, from a price perspective, it topped in November, but from an everything else perspective, we've sort of just been putting in lower highs ever since early 2021. And so it's been dragging on for quite a long period of time. And I really do think that it is going to take a long period of time to really see this carve out some major bottom and then to slowly trend back up. One of the things that I think a lot of investors should consider and why there's so much fear is because there are so many projects that were sort of exposed in 2022 as scams, or maybe they just were completely unaware of how the project worked, or whatever it might be. There's so many of them, countless projects that got rugged. And when that sort of stuff happens, it really makes people not trust crypto in the same way that they once did. If you're putting your money into a lot of projects and you come back later in the year and they're all down 90%, and the macro still looks pretty bad, it can be somewhat discouraging. And this is what gives crypto such a bad name: is there are a lot of nefarious actors that come into the space. They create copycat projects, right? They copy the good fundamental projects that were built out during the bear market. They copy them as you go into the bull market just so they can ride the wave, and then they cash out. And then they maybe do it again during the next cycle. But this gives crypto a bad name, of course, but it could really make people not trust it for a long period of time. And I think that's what you're seeing. I mean, there's a lot of extreme fear in the market, and it takes it. This is why these bear markets are so brutal, and they can last for a long time. Is it just takes a long time for market participants to really digest what's going on. Once we've really seen retail leave the space, then you get into a longer accumulation phase, and it just takes a long time to trend back up because there's so much faith that has been lost. Okay. But then eventually that faith is restored, and we typically just go back into another bull market. As of right now, I don't think we can say with any confidence that the fear and greed has turned back around. I mean, so far, it just looks like a downtrend, right? Like, so far, if you were to just look at this chart, let's just remove the Bitcoin price. So far, it's just a downtrend. I mean, could it be turning around slowly? Maybe, but there's no clear indication that it has yet. All we've seen so far is a high, a lower high, and maybe a lower high, and a low, and a lower low. Nothing else. And if we were to go look at say a few other things, one of the things I like to look at too is taking the moving average off and isolating some of the just some of the periods. Like, so this is when we were between 90 and 100. So what this would show is that just because you go to the extreme greed, the higher end of it, the 90 to 100, doesn't mean that you should sell everything, right? But could be the time to start taking profits. I mean, if you had bought some Bitcoin over here, this would have shown you, hey, maybe time to start taking profits in 2019. Maybe not sell the whole thing, but it could be worth taking some profits, and then it would have worked out. Then again, over here, to slowly start DCing out of the market as it goes higher. Okay? And then if you show it from 0 to 10, what you'll notice is only a few times it really goes that low. Went that low in November of 2018. It did not mark the bottom. We went just a bit lower. Went there in March of 2020, and it also went there in June. Now, what's interesting is that, after going to this level in November of 2018, we sort of just went down for another month or so, and then went sideways for a while, and then we broke back up to the upside. In March of 2020, we had a V-shaped recovery out of it, which was a bit different because of all the printing by the Fed. And if you go over here and look at 2018, we also had a nice bounce up, but we still ultimately went sideways for a long time, even after we went to that level, and then eventually we broke down. So one of the things that's useful to note is that just because you hit it doesn't mean you have to rally. But if you only ever bought Bitcoin when the fear and greed was between 0 to 10, I mean, historically, you're not doing that bad. I suppose this cycle so far, that's not obvious. And I've been vocal about thinking that we could eventually see a lower price. Nothing's a guarantee, of course. I mean, it might not happen, but I think it's something that people should be prepared for. And really, over the grand scheme of things, if you fast forward a few years, this is still likely a relatively attractive area to get in. Is it an attractive area in the short term? That's anyone's guess. I mean, again, risk assets still remain under pressure. The Fed still remains hawkish. The stock market remains in a bear market, and certainly nothing is a sure thing. But these are very different ends of the spectrum, right? Like extreme fear and extreme greed. And we actually haven't been in the 0 to 10 range for quite a while. If we were to sort of expand this out from 0 to 10 to all the way to 0 to 20, it would look like this. And this shows you just how it's not always the best indicator, right? Like, it's not always the best indicator, because in 2018 we were between 0 and 20 for basically the entire bear market, and then the floor fell out in November. If you had bought every single one of these dips, and I did buy some of them in 2018, especially Q3, it would have felt like, hey, you're getting a really good deal, and then all of a sudden the floor fell out at the very end, and again, it felt like you were getting a good deal again. You fast forward to mid-2019, and we went higher than all of these prices that we saw during sort of the latter half of this bear market. But it took a while to get there, and then every dip along the way over here, we went to the 0 to 20 range, more or less, and we still continue to go down, and then we capitulated all the way down again. So when you look at it strictly like this, it's not necessarily the best indicator, but it does provide at least some perspective on the market. And again, flipping it the other way, looking at 80 to 100 shows you when the market is getting pretty overvalued in the short term and is likely going to at least see some type of a pullback, if not the end to a major bull run. The last thing we'll do is we'll look at a shorter term moving average. I think this can at least be somewhat useful rather than looking at, say, the 90-day EMA. Why don't we take a look at the 30-day SMA? And that shows you so far, we did put in a lower low here in June, but we've been unable to really put in a higher high. So I mean, we hit a high over here in January of 2021. We hit a lower high over here in November of 2021. And then, I mean, so on and so forth, right? I mean, we just sort of continue to march down. No clear sign of a reversal just yet. And you can also see we sort of hovered, continue to put in just lower lows for a while back in 2018 before ultimately breaking back up to the upside. We'll see if this, where this ends up. It is starting to curl up a little bit. And Bitcoin is currently coming in at just below 19.4K. So should be some interesting times ahead as we get into the end of the year and see which way Bitcoin breaks, whether it's to the upside and we break past the bull market support band, or we just get rejected once again and see some type of major capitulation going into the end of this year, early next year, like 2014 and 2018. If you guys like the content, make sure you subscribe, give the video a thumbs up. Check out the ITC newsletter. You can find a link to that in the description below, and I'll see you guys next time. Bye.